the QB going to shake out of? It was more of what's the integration plan? How are we going to do this? What we did was we got them, in agreement on terms, figured out the model. One, from a founder standpoint, is like, just listen, right? Like you surround yourself with a board, investors, other people. People have their expertise, right? It's not your...
We all exit our company eventually. The question is, will it be on your terms or someone else's? Strategy matters. Timing matters. The right partner changes everything. Brought to you by Meritage Partners. Here is your host, Brian Franco, author of The Inevitable Exit. This is the M&A Guy Podcast.
Some of the most valuable businesses in today's market operate in a highly regulated environment where compliance, execution, and trust matter just as much as growth does. But scaling in those industries comes with a different level of complexity and a different level of opportunity. I'm Brian Franco, founder and CEO of Meritage Partners, and this is the M&A Guy Podcast, where we help founders build companies and scale intelligently so that they can exit on their terms. Today, I'm joined by Anthony DeSena, CEO and founder of Pax Health, a company operating at the intersection of healthcare delivery, operational excellence, and patient outcomes. Anthony, good to see you. Thanks for being on.
Yeah, good to see you, man. Thanks for having me on.
It's good. I know it was kind of funny. We had a time set earlier today, but as traffic has it, we have our version of it here on the West Coast. You have a version of that on the East Coast. I'm glad you made it. Glad we didn't have to reschedule. So it's good to see you on.
Yeah, appreciate the flexibility.
Yeah, for sure. And most importantly, we both show up here because people that are tuned in and listening in, they want to understand what you and I do. And specifically, I want them to hear more about the success that you've had, and specifically with Pax Health. And I know there's a whole novel ahead of that, before that, in terms of your career. But why don't you kind of give us the background of, where you started and how you got here and where you're headed?
Yeah, no, appreciate that. Yeah, definitely a long journey. Definitely a bit of a odd journey, but one I'm glad that I'm on here. So by trade and background, I am a physical therapist. So I was a treating clinician. I had the absolute privilege of seeing patients for about 15 years. Also always had an entrepreneurial spirit, really loved business, really realized that the more of something you do, the more people you can help, the more people you can employ, etc. As we were treating patients, my partners and I scaled a pretty cool business. We were in outpatient physical therapy, started with one clinic. We grew it a bunch, did a private equity transaction in the middle of that, a couple mergers. One day we woke up, we had about 130 clinics in 3 states. And then we inevitably sold that to a hospital system. That was about 5 years ago now. It's crazy to say out loud, but
yeah.
Once that second exit happened, I realized that I just wanted to do something good again and something new. Really felt like I did all that I set out to do in physical therapy, and decided to figure myself out a little bit. And I did a lot of deal advisory work, right? So I started a consulting firm of my own, had a couple of really smart people with me, hired some bankers, and did a lot of deal advisory work for folks that, smaller, right? Smaller deals that probably wouldn't get on the radar of a group like Meritage or a big investment bank or anything there. And really, this was my way of helping people, right? And so instead of treating them physically, I was helping them navigate transactions. I feel as someone who had been a founder, been a buyer, been a seller, right? I fit right there in what they needed and was able to help a lot of people. And then from there, we got on the agenda and on the radar of private equity funds they were engaging us to help them look at healthcare deals. Because as you know, healthcare deals can be pretty tricky. And there's a lot that goes into it. So we were in this really cool space, right? We had PE guys and groups that wanted us to help them out. We had founders who were just helping navigate, and we were putting things together. We're having a blast. And that's really how Pax Health was born, right? Is that there was a few groups that were looking to engage our services to help us bring them to market. And 2 in particular were like really good. And I was like, okay, we're going to put these together, right? A, to get size, B, to get sort of synergy. And then the more I went through the diligence, I'm like, I want to buy these businesses. I really like this. Right? But that, kind of being a deal guy like you, I knew that I needed a little more size, right? So I went out, we did a third deal, and how Pax was born. So I formed the Pax Health platform. I got 3 founders to trust me enough to sell their businesses to me, knowing I did not have the money yet. But what we did was we got them, in agreement on terms, figured out the model of what this thing would look like when everything was together. Really good groups on their own, but really great together. And that's what we did, man. We ran our own process. We went out and raised capital from some private equity investors who are on the West Coast with you. When we had a co-investment from another group, and it was off to the races. So as a platform, we're almost 2.5 years old now, which is wild. Again, wild to say outside. I mean, again, right. That was my second wild to say out loud statement. And that's where we are, man. So really, really excited to talk about Pax today and tell you what we're up to.
Well, congrats on all the success and leading up to this moment in time. It's you and I have interacted at a few healthcare events on the East Coast. And last time I saw you, I think it was November, and we talked about getting you on the podcast because I love your story. I love what you've done. And yes, I mean, at heart, like we're deal junkies. We love deals, right? And sometimes some of these deals look so good, but I want to ask you something because we both work in the healthcare space as well as other industries. Why did you choose such a regulated industry? And because look, healthcare is if not one of the most regulated industries in the world, right? Yeah. But and what were some of those challenges that you faced as a founder coming in and rolling up these companies?
Yeah. So I'll tell you this: I really had the itch to get back into operations. Deals are great. I loved it. It was really fun to build stuff, but I really wanted to just jump back in the seat. And I had been a COO before. I've been a chief development officer, founder, but never CEO. To be honest with you, I mean, my advisory firm, yes, but not the scale that is right now, right? So had the itch to do that, and then really it was just a compelling story around Pax. I mean, obviously there's no secret that mental health care, mental health is an epidemic in the country right now.
Absolutely.
And I think really to answer the question best, to understand what we do. So we are an outpatient mental health care company that provides services mainly for injured workers. So in the work comp market.
Yes.
And really, if you tap back into my story and in the time as a physical therapist, I treated a lot of injured workers, right? And I was in New York City, right? So firefighters, cops, train operators, teachers, construction workers, just, people that keep the country running. And I was able to help a lot of these people. I really was. But when I look back on it, nobody ever thought about their mental health, right? Nobody ever. And then I could tell you too that nobody ever thought about their family's mental health, right? So now you have somebody who, firefighters, train operators, they see some bad stuff, man, and stuff that, you see enough of it, it's tough to get over. And no one ever really thought about that part. At least I didn't when I was treating patients. And so it was just another way to help the people I used to help differently. And we have a big belief of, because we're heavily on the work comp side, but so we take commercial insurance, we're in network with everything. We have created a system where, and an environment where we treat the injured worker, but we also treat their family and their community, right? That's super important.
Amazing. It is important.
Is really key. So that's really the why behind it.
Yeah.
And then the other thing I'm really proud of in building Pax is how else did we disrupt the industry a little bit is when I brought these companies together with my team, there was a lot of contractors, right? All of our providers were contractors, 1099. And I understand why smaller businesses do that. It's less risk on the margin profile, things of that nature. But I also realized you can't control quality of care that way, right? Because you're not able to make sure folks are getting scheduled quickly. You're kind of at the mercy of the schedule of the contractor. So I'm really proud to say that we've changed that a bit. We're currently about 215 care providers, and over 85% of those are W-2 employees of Pax Health.
Amazing.
So we're not a network. We are we're a company. We're a company. People love the logo. They fly the flag. We have the holiday party. They do the things. That wasn't the norm, though, Brian. I got to tell you, that was not how the industry worked, and it's worked really well for us. So that's
great.
Why behind all of it. Yep.
And that's great to hear. But, as people listen, to this conversation we're having, I mean, I do see this from my perspective, in regulated industries specifically, complexities become your competitive advantage because these are barriers of entry for others coming into your market. And in the way you structured with B2 employees, as you described, versus that, contractor model, it really speaks to the culture that you built. And, what that's what makes these businesses so interesting from an M&A perspective, because when you get it right, those barriers to entry actually become your advantage, and you position yourself well from that standpoint. I wanted to
Yep.
tell you too, share with you, we had in our family too. My father had an injury. He was injured on the job. The difference is he was the owner of the company, and workman's comp covers everyone except the owners, right?
Yep.
And so it was difficult to see his health deteriorate pretty rapidly, after a few surgeries and what have you. He had spinal injury is what it was. And I can tell you from experience, inside, and this is very personal, but inside our own family, I mean, it was complex, because you saw a man, with success, and with just building his best life, right? And that deteriorated with his health. And so I applaud you for the work that you're doing, because you are making a positive impact, not only on the patient but on their families, because they're as impacted as the patient in different ways, of course, but they are as impacted. I applaud you. I think this is great what you've done and what you're doing, and I'm looking forward to watch the success play out, and as you roll out, throughout the.
Well, yeah, thanks for sharing that. And yeah, we're just trying to do good work and get people there. But yeah, it's yeah. So
Yeah.
I agree we're needed, and luckily we're able to take what we built and help as many people as we can, for sure.
It's amazing. Well, look, let's. I'm going to switch gears a bit and actually back up a little bit, because you talked about, you locked in and negotiated transactions with a couple owners before you aligned the capital, which eventually you did. But my question for you is, what do investors look for in healthcare as they evaluate healthcare businesses, and what do you think they care most about beyond just the financial performance?
Yeah, it's a good question. What I'm seeing a lot in, folks I'm talking to, my sponsors at HCAP Partners and Hamilton Lane, I'll talk to them sometimes about other deals that they're looking at or doing, and sometimes I'll help them take a look. Even it really is coming down to the management team. The team is almost more important than the EBITDA at this point, right?
Yeah.
There's, this better than anyone. There's a lot of capital out there to be
Yes.
deployed, so the dollar part isn't as hard, right? I think people are less concerned on multiple. Now, obviously, nobody's gonna do anything silly, right? But like a half a turn, a 1 point, like the difference is going to come with who's going to manage it, right? Because if you think about all the models that are built, right, all the smart people who build the models of what this thing's going to look like in 3, 5, 7 years, that can happen if you have the right team, right? If you don't have the right team, none of it matters, right? So if you say like, okay, by year 2, we're going to get these rate lifts on contracts, like, sure, if that works, that's awesome, but how are you going to do it? So I think they're looking a lot at management team and figuring out the holes in the dam of that prior to, just so they know, right? So there's no surprises, and thinking about ways to kind of invest in that and bring good people around the table.
Exactly. Well, in healthcare, trust in systems really drive valuation when it comes to, and whether you're raising capital, debt, and or equity. We see this all the time, because buyers and investors, they're looking for predictability and risk mitigation, right? And specifically in healthcare, in the space that you live, that often comes down to systems and management teams and execution. And so, I think the private equity community and investors alike are really focused on that more now than ever, because historically it was all about financial engineering and, getting to critical mass, getting to size. And you did that, yes, by organic growth, but also by acquiring companies. And, I always say, deals go to die in integration. And if you don't have the systems in place, if you don't have the management team that could execute on that plan, the execution of the integration is really what's going to make or break the business. And you've successfully done that. You're doing a great job as you continue to grow, both organically and inorganically. But you're right. I mean, there's plenty of capital sitting on the sidelines. That's not the scarcity. The scarcity is really good businesses with strong leadership, and that leadership depth is what we're talking about, because
Yeah.
without it, and you said it best, you didn't say I built this company, you said I built this company with my team. And that I heard that loud and clear, and I agree with you.
Yeah. Yeah, and I on that note, it's a great point. I have to give kudos to HCAP and Hamilton Lane, the way they were thinking about this. And we had a lot of pre-close, conversations as we were going through quality of earnings and all that stuff. But it was less about like, what's the QB going to shake out of? It was more of what's the integration plan? How are you going to do
Yes.
this? Who do you have around the table? Are you thinking about this? Right. And, I was very fortunate that in my past life and past roles had some really great smart people around the table with me, and some of those came with me. Everyone took a little hiatus and rejoined when Pax was formed, so I have some folks who've done this before, which is really cool. And then we have some
Mm.
folks who've never done it before, and that's even cooler. Like, what do I love to do? I love to build companies, but I also love to build people, right? And I
Yeah.
think it's a weird place to sit, Brian. Like, you really love to build stuff from 3 million to 30 million of EBITDA, right? Above
Yeah.
that, I'm not the guy, right? I'll tell you that
Yeah.
right now. Like, that is just like a different skill set that I don't have. But a lot of people don't want that, what I'm doing right now, right? In teaching people and leading people and making them see how to do it, right? People have never seen a board deck before. People have just never done monthly reporting, financial calls before, things like that. And it's interesting to see that go on.
It is. It really is. Well, let's dive into, kind of what you're touching on, building for scale versus building for that exit. And, as a founder, how do you balance growth while also positioning the business, for a future capital event, which may, be a recap or it could be a full exit, but how do you balance all that?
Yeah, I think it's a good question. I think the biggest part is people, right? So you'll hear it in our halls all the time. What are we as a company? We're people helping people. It's what we love to do, and we're people who are growing people. So as the company grows, yes, we saw a lot of visits, and yes, we saw a lot of unique lives, but we also create a lot of jobs. And that's really fun to say where we go there. And I do believe that the people we're building are going to be the ones that's the difference maker later, right? We're going to have the next time somebody looks at this company, whenever that may be, we're going to have the right management team in place, right? We're continuously building that. We're continuously shuffling the chess pieces around to get people in the positions that set them up for the most success personally and professionally, but also set the company up for the most success there. So I think that's part of it. I also think that proving the playbook for multi-state growth is super important, right? We've figured that part out of how do we enter a new market? How do we know if it's a good market? There's not a lot of people doing what we do specifically. So there's not a lot out there to buy, to be honest with you. But there's a lot of great companies who aren't focused on injured workers. That doesn't mean we shouldn't acquire them, right? So from an organic growth strategy, we're going into new markets, workers' comp first, and then getting credentialed and licensed and all the things for commercial insurances and federal, if we're going to do that.
Yeah.
From an M&A standpoint, we're looking at business. If someone's doing as much injured worker as we are, I'd love to meet them. But for the ones who aren't, there's still a really good team of clinicians. It's just type of training, right? You're dealing with a different population. Maybe the paperwork's a little different, but we have this sort of two-prong approach on how we can expand. And I think if we could prove that we could wash, rinse, and repeat that, that's the exciting part. Because you know this, right? The next capital event, they need some meat on the bone too, right? So
Right.
where are they going to get to and where are they going to go? So I think we're positioning it well that way. But really just focusing on the people and the outcomes is the big part.
Well, you and I both know the best exits are built years in advance before they ever happen. And that's the key because, those best exits happen when founders like you build with intention, not necessarily just urgency, you build with intention. And there'll always be those urgency that those influences, if you would, but with the intention that I think that's the word. When I listen to you talk and I see you in the times we met, you've been very intentional about your growth and your culture and your people and who you put in the right seats. And I really think, and I believe that's contributed to the massive success that Pax Health has had and will continue to have. I mean, yeah, for sure. I mean, it's been fun to watch. It definitely has been. And love to see how this, even plays out over the next 12 to 24 months. But I have a closing question for you.
Sure.
So, we're going to have listeners here. They're in the healthcare space as well. Others will be in adjacent markets or industries. I think that from the standpoint and the theme in and around regulation, but for those founders building specifically in healthcare, and let's also include those that are also building a company in regulated industries, what's one of the big things that they should focus on today if they want to create long-term value and optionality for themselves?
Yeah, I'm going to answer that with two answers. So the first
Okay.
one from a founder standpoint is like, just listen, right? Like you surround yourself with a board, investors, other people. People have their expertise, right? It's not your job as the founder owner to know everything. You're going to want to control everything. That's what makes entrepreneurs what they are and how they're wired. But they're really good at doing a lot of stuff, and we're really good at threading needles to make things work together and seeing opportunity everywhere. But when it comes to like the nits and the gnats and the like really important detail, just shut up and listen, right? Listen to other people. There's really smart people out there who can't multitask the way a founder does. So what does that mean? It means that they're like painfully focused on execution of that one thing, right? So like listen to the people around you, listen to people who've done it before, and really take that advice there. From a regulatory standpoint, to specifically answer the question, is you got to know what your plan is. So going back to your point, be intentional in what you're doing. Always be curious, right? I'm a big fan of being curious and seeing what's out there. But if you're intentional in what the plan is, it's going to help you do that, right? So if you're like, okay, I want to take over the country, that's very different from a regulatory standpoint than it is like, hey, I'm in New Jersey, I'd like to expand to Pennsylvania, right?
Correct.
That's a very different conversation with council or whoever it may be.
Yeah.
So I think knowing what that's going to be. Now, I think we should all want to try to take over the country and expand as much as we can, but you have to do that in bits and pieces. You can't get there all in day one, right? So I think being intentional, being patient, being ruthless in what you want to do in your execution is super important. And especially to your point, we're in a telehealth environment, man. We're about 35% brick and mortar, but the rest is through telehealth. And we're touching lives in 43 states right now. That's
Wow.
awesome. But
That
that's
is awesome.
a lot of licensure, corporate practice of medicine states versus not, work comp specifically. Some are directed care while others aren't. Some are a hybrid of it. And there's just a lot to know. And to think that anybody's going to know it all is wild, right? So you're not. Listen to folks, know what your plan is. And look, man, sometimes you're like me, right? Like sometimes opportunity presents and you're like, we're going to go and we're going to figure this out. And that's down there, but to whatever degree you can think through it, you'll be able to plan more and ask the right questions.
That's right. Anthony, thank you so much for being with us. It's been inspiring to watch you and to have met you a couple of years ago. And like I said, I'd love to have you back at some point in the future and just talk about what's next.
Yeah, would love to do that and appreciate you having me on.
Yeah, for sure. So, and if you're building a company and want to understand how to turn that into real enterprise value, not just revenue, start by learning the principles behind successful exits. Grab a copy of my book, The Inevitable Exit. You can find that at inevitableexit.com. And if you want to surround yourself by founders building valuable, scalable companies, join us in our newly formed Empire Builder community, where we unpack all of that and teach you how to build for your first exit. The most valuable businesses aren't just built, they're engineered. I'm Brian Franco, and this has been the M&A Guy Podcast.